What is up? I am excited about this one. This is going to be everything you need to know about supply and demand, liquidity, everything. Once you watch this video, you shouldn't have any doubt about where to buy supply and demand and which zones to use. So there's three types of supply and demand I like to use. Now, all of this supply and demand, they need to be responsible for a break of structure. So in a downtrend, we have this low, and can you see we break structure. Now, what is the area of supply in this? Well, we have accumulation areas. That is simply, to put it simple, as it said in the titles, areas of accumulation. We can see we accumulated all these orders here. Now, this is the place responsible for the big drop. So when price comes back to where all these orders are here, we can look for a reaction to play price lower. Exact same thing in an uptrend. The first thing we need is a break of structure. If your area of supply or demand does not have a break of structure, do not use that area. And then what do we need here? Well, we need accumulation. Can you see here? This is the last part, or the accumulation that occurred before breaking structure. So now when price comes back into here, we can look for a buy to target price higher. Really, really simple and a great POI. Now the second one is up to down or down to up, depending on the trend. Always downtrend, only look at supply. Uptrend, only look at demand. Now some people call this sell to buy, buy to sell. It's the exact same thing. So for a downtrend, you're going to look at the last down to up. So again, what does it start with? It starts with a break of structure. Now, what is the last down to up or down to up areas in here that cause this break of structure? Well, can you see we have a down to up before we broke structure? So if we draw this here, this is our down to up. This is our area of supply. This is where we can look for price to tap into and continue lower. Now, what is the opposite of down to up? Up to down. So same thing, you want a break of structure first to occur here, and you're looking for the last up to down before breaking structure. Here we can see we have an up to down before this break of structure. Boom. What does this become? Our area of demand. So here we can expect price to tap into and look for longs higher. So we have accumulation and we have up to down or down to up. Nice. Now the third one is valid highs and lows. This is also known as single candle order blocks, single candle areas of supply and demand. And how do you trade these? Well, look for breaks of structure. So you get scenarios like this where we break structure. And can you see we don't really have a clear up to down, accumulation. What can we use as an area of supply? Well, we want to see the highest bullish candle in a downtrend. This bullish candle here, right, it's wick, can't be contained in another candle's wick. Has to be a standalone bullish candle. Once we close below that, that becomes an area of supply, and I will get into chart examples. The price can look to tap into and trade lower. So it's a single candle area of supply. Same thing. What do we start with? A BOS, a break of structure. Now we look for a swing low, all right? So let's say we have a swing low in this area here. And we look for the lowest bearish candle. The bearish candle that cannot be contained in another candle's wick. Once we find that, we highlight that candle. That becomes a single candle area of demand. We can expect price to tap into and rip up. All three of these are great. All three work amazingly. But there's one key thing that is required in all three. Otherwise, it is completely useless and you should not trade them. What is that thing? That is liquidity. What does liquidity look like for these examples? Liquidity is going to be the first tap into your zone that pushes price in the intended direction. If this is a downtrend, your intended direction is lower. You need a shallow first tap into the zone. Okay, here, for example, oops, can you see? Let me just delete this. We have a shallow first tap into this area of supply. This is liquidity. This is where people have their stop loss. This is where sellers are involved. This is what we want to stop out. Now you want this tap to be shallow. Why? Because if this is all the orders left to be filled, we don't want price to do this. All the orders have been filled. This isn't liquidity then. This is the orders being filled. So you want the tap to be shallow. Now, if you don't have this, don't take the trade. Look for price to take out this tap, take out this liquidity in your area of supply, and then continue lower. This is what the difference between higher probability and low probability areas of demand and supply is. So it's the same thing in this example here, okay? You're going to want something like this. So this is our single candle. You can see we have a tap into that. Now, is your intended direction in this higher or lower? We're in an uptrend in this example, so our intended direction is higher. So this tap has to make a higher high. If it doesn't, it's not valid. So if this tap does this, right, some people draw their taps like this. They're saying, oh, we swept liquidity. This tap isn't valid because it never made a higher high. So only once we make a higher high, then we can highlight this as our tap. Look for price to sweep that. This is where you want to enter your trade and expecting a higher high. And we'll go back to the previous example. So up to down, it's going to be the exact same thing. It's going to be something like this, right? This is the first tap in here. We sweep that, we dump. Boom. Here, what is it going to look like? This is going to be the first tap. We sweep that, we pump. Again, accumulation. In these accumulation areas, you're going to realize we have shallow taps. And if we don't use the area. So again, in this accumulation, we're going to have shallow taps. So when you look to take your sell in this accumulation area, you're going to wait for price to sweep that, dump. When you look for buys in this accumulation area, you're going to look for price to sweep that, pump. Please watch this first 6-7 minutes, however much you need to, because this is the basis of all supply and demand. So we have accumulation, we have up to down, down to up, right? Accumulation, up to down, down to up, and we have valid highs and lows. Now, let's go to the chart and look for real chart examples. Okay, this is literally from today's market, live time. So we can see we are in a downtrend and we break structure to the downside. That means we are looking for what? Sells. Now here, can you see before we took this low, what do we have? We have this clear accumulation. Price accumulated, then it dumped. You can see this isn't accumulation. This is aggressive moves up, aggressive move down. Here is accumulation before we dump. What do we notice here? This is how shallow the tap can be. Can you see we left the zone here? We tapped back in, and then we push lower. So left tap, lower low in our intended direction of pushing price lower. This becomes what? This is our liquidity. So now we have the steps to frame this. We know this is a valid area of supply. We know we are in a downtrend, and we know only to enter after this has been swept. If I show you on the lower time frame, it would be more obvious. You can see price left the zone, tapped back in, and then continue to push in the intended direction. So as price now comes to sweep this tap, right, and into our area of accumulation, we know there's strong selling power. We know we've stopped out everyone who had their stop loss. Here, look at that. We sweep that, we come into this area, boom, we dump. Now, let's look. Again, what do we have? New, low, and a new break structure, right? And the lower time frame, this will be a break structure, so let's just assume it's a break structure for example's sake. Now, we don't really have an area of accumulation like this before the dump. You can see aggressive move up, aggressive move down. We don't really have a sell to buy or buy to sell before dumping or up to down, right? So what do we have? We can use a single candle order block or a valid high or low. Now, when we have two, so you might have areas where we have accumulation and up to down, or accumulation and single candle valid high in the same area. You have to see which one gives you confirmation and which one your liquidity is, and we'll get into that. So here we can see what is the first. We need a swing high. We can see this candle here is a swing high. Now, what is the highest bullish candle? This isn't the highest bullish candle. This never closed above this. This is our highest bullish candle. So this is where we can mark our single candle area of supply or our valid high. This is where we can expect price to be, right, up to down. Now, what we need, we want some sort of liquidity. Now, we don't really have liquidity in this area. Now, nice, you can see here, which is good, we form liquidity just below it. This is valid. Okay, if it comes just below, this is valid. A lot of people are going to have their protected high here, not us. we know this is our liquidity. So now we have our single candle order block. We have our liquidity, or a valid high, I like to call it. And now as price comes and taps into here, I'm expecting a dump. And even we can still now come sweep this and then push lower. Let's see. I still would call this completely unmitigated. Right, like we said, this is still fresh. Still valid for break and structure. Now we're close below. I'd still keep this area and expect for us to sweep it. And dump. Look at that. We just wicked it, but that is still valid as long as we don't close above. All right, came into there and huge dump from this single candle order block. Now let's look what we have at this example, because this one is really, really nice. You can see we broke structure. Clear BOS to the downside. Now let's look at what happened in this area, in this zone. Can you see we put a down, 2 up before this big dump? So what does this become? This is a lovely example of down to up or sell to buy before dumping. This is a really nice area. Now, as you can see, we have liquidity just below it in this high, but this is the liquidity I'm focused on. You can see we left it, we tapped back in, and we pushed lower. So we have a lovely down to up area responsible for breaking structure, and it has a first touch into it. Let's see what happens once price sweeps this. Play it out, we be patient. This is a great POI. You should now know when price comes into here, you should start looking for potential sells. So I'll speed it up and I'll play it on a higher time frame, just for example's sake. Let's see what happens. Okay, now you can see we tap into here. I'll go back on the lower time frame. Right, we come into this completely unmitigated, completely fresh, down to up move that broke structure and as a first touch into it. As soon as we come back into the area and we sweep liquidity, my eyes are locked in. I'm thinking, damn, this could be a nice area to look for my sells in. And what do we do? Well, let's see what we do. I'm expecting a nice big dump now to create a lower low past here. Look at that. This isn't random. Price didn't randomly just decide, oh, you know what? I want to start moving lower. All this was accumulation, whatever you want to call it, liquidity, right? Stopping people out. We come exactly to our area. We sweep this liquidity to a T. Look at that. We sweep that first touch to a T, and then we just facilitate a huge move down. It doesn't get any nicer than this. This isn't random. And when you learn how to spot this, the charts become a lot easier to read. And guess what? When we look for uptrends, it's the exact same thing. So the first thing we start with is a BOS, a break of structure, giving us a protected low down here. Now, can you see in this example, before breaking structure, we have this real clean, what is this? What kind of demand? Up to down before ripping. Now, why does this entice me? Why does this make me happy? Look what we have in here. We broke it. We have a first tap in this zone here that pushed price higher. So we have an up to down responsible for breaking structure, and we have a first tap that pushed price higher. Now, this is high probability. I know once we come into the area, this is a great place to look for what? To look for price to sweep and rip up. Look at that. You enter here, right? You look for your confirmation and you ride that up to that higher high and you smash take profit. This is the 1 minute time frame. Works the same on the 5 minute, the 15 minute, the 4 hour, the daily. It all works exactly the same. Again, same thing here. We have a high that we break. Now you can see here, this is clear area of accumulation before pushing price higher. So I'm expecting price to boom, boom. Let's see what we do. Where we put in a first touch. Thank you. stop out the early buyers, sweep that, and rip higher. It's the same thing over and over again. Okay, this example is super, super important as well. So you can see we take out all these highs here, we put a low in here. So we're looking for areas responsible. Now, a lot of people, let's say we even use this swing high up here they're using, that's fine. So you're looking at two areas. You can see we have a beautiful up to down before this impulse move up. So this is a lovely area of demand. And we have this area of accumulation, right? Chop, rip up, or single candle. This isn't a single candle because this isn't a swing low. So we have nice areas. Now, this is also a single candle order block. Why? Because we have a swing low. Boom. This is the lowest bearish candle, right? This one here. So we can even refine that to this single bearish candle. So a single candle, we have a bit of accumulation before ripping up. Both are valid, okay? Both are fine. Which one would I frame this trade off? I would not frame it off this one here. There's no liquidity. There's no first tap. What about this one? Well, this one, this first demand zone is providing liquidity for this single candle valid low. So this where people are going to try to get bought in, stopped. The real move then occurs. Let's play this out. Boom, look at that. This is a valid area of demand. So we tap in it, we try to push higher. We get people excited, yeah, jump in. Stop them out, come to the real place where we know to enter from and rock it up, right? This isn't random, this happens every single day. Okay, nice. Even now, if we just start on the H4, let's just look at some order flow, right? Look at who's in control area of supply and demand and how we can start to frame trade. So right now we can see price is pushing lower. So let's just say, for example's sake, I want to look for shorts at this break of structure here. Now, we don't have area of accumulation. We don't have a down to up. I'm looking at this highest bullish candle here as my single candle order block. Now, we can see we also have a lefter zone, a first tap into this zone here. We can look to frame a potential short after sweeping that liquidity. So there's the sweep. Let's see who is going to win, supply or demand. Boom, that tells me we are in a big uptrend, so obviously demand's going to win, but that tells me demand is in control. Demand wins. So now let's look, right? We had this area of supply, right? That was beaten by what? This swing low, and we closed above, so this is the lowest bearish candle, right? Because this one never closed below this one, right? We look for areas of demand, and we have this single candle or this area of accumulation here. This doesn't look like accumulation right now on this higher time frame, but on the lower time frame this definitely is accumulation. So we have two zones to potentially frame off. The same thing. What do we notice about this one? It doesn't have liquidity, right? What is it providing? It's providing liquidity for this lower zone. So my frame is this area of demand broke this area of supply. We look for price to tap into here and continue higher for extra strength with fair value gap, etc. Showing you this area is strong now. Let's see. There's the sweep. Nice. We then rock it higher. Now again, what do we notice as we tapped into here? Right? We had this is going to be fractal on the lower time frame, like the 15-minute. This is going to be a downtrend. This is going to be a break structure to the downside. We can see we had this area of accumulation, right, responsible for pushing price lower. But we're expecting this demand to break through supply. And as you can see, look, supply is trying to reject it. It's failing, and it breaks. So this supply failed to make a new low, and we broke it. So now again, we know demand is in control, right? It's breaking areas of supply. This demand broke this area of supply. We came back into it, swept liquidity, continued higher. Now, this area of supply got broken by what? Got broken by this area of demand here. So what can we do? We can look to frame a set of buy in this area of demand to push price higher. Let's see. Boom, we come back into here, we sweep some liquidity, and then we continue to rock it higher. It's simple, I'm telling you. So yeah, I hope you understand why I said after watching this video, you shouldn't have any problem. This is everything you need to know about supply and demand. I promise you, study, 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 and boom, make sure you're on the right side of market structure and you'll be rinsing it. If you want my full detailed trading course, watch me live stream my trading every single day and just full access to me and support, make sure you join my premium Discord. The link is in the description below. And I have also started a one-on-one mentorship where I will work with you, hold your hand the entire way through until you are finally seeing consistency and profitable. If you want to join that, make sure you join the free Discord. Link is in the bio and you can see how in there. Any questions, anything, feel free to drop them in the comment section below. I appreciate likes and subscribes as always. Apart from that, thank you for your time and I'll catch you in the next video.